Okay, let's take some of those questions to Sudhir Singh, CEO of Coforge, 8th largest IT company now, big jump from 2018 as well. Sudhir, the context matters. We're looking at an overall, I think, tough environment for IT and IT services companies in India because of what's happening globally. Having said that, let's just start with a bit of your view on this specific quarter and the margins coming in, not really a dip, but I think below estimates.
I agree with you completely. Context matters, and I do want to make sure that I share the context as we see it and as we've delivered it. Our sequential dollar growth, and this is sequential dollar growth, has been 9.8%. The CC growth that you talked about has been 8%, and as you rightly said, organic CC growth itself has been around 6%. So the growth numbers have been fantastic. On margins, EBIT, we've been very, very clear. The numbers we're talking about are EBIT margins, not EBITDA margins. EBITDA margins have jumped 61 bips sequentially. EBIT margin again has gone up. And the very clear guidance we've given for the current year is that EBIT, reported EBIT, is going to be 14% for Coforge in fiscal year 26 itself. That's going to be a big, strong jump at a time when growth is set, as you can see from our numbers, to be extremely robust in FY26.
Path to that 14% looking like, Sudhir?
It's looking assured. It's looking definitely assured, and the path to that 14% is looking assured because there's almost a 70 to 80 bips upside that will come structurally from a reduction in ESOP cost where we have to do nothing at all. Second, quarter one, the 13.2% EBIT margin came despite a very significant ramp up in the Sabre large deal that the analyst earlier was talking about. All the costs of that ramp up have been borne within this quarter. They will get netted off going forward. Also, with the kind of growth that we clearly see ahead of us in quarter two, in H2 and for fiscal year 26, we expect SG&A as a percentage of revenue also to come down. So 14% is a number that we are solidly focused on, and that's a big blip, an upward blip over FY25.
Mr. Singh, that's a lot of confidence. I haven't heard too many companies talking about these words, that for the kind of growth that we are looking at. Where is this coming from? I mean, is it the NA region which is sudden now saying that we are happy to give out deals? Because I haven't heard too many other people say this.
Well, our confidence comes from our track record, Neeraj.
Sure.
Our commentary is different because our track record is different. And this isn't a 1 or a 2 year track record or a 3 or 4 quarter track record. This is the 9th year in which the Coforge leadership team is going to deliver sustained and robust. And you don't hear those two adjectives together most of the time. This is the 9th year. Our confidence comes from the fact that even in a quarter like Q1, when most of our peers have talked about bleak macros, we've closed 5 large deals. Our confidence comes from the fact that at the end of Q1, our next 12-month signed order book is 46.9% higher, and this is signed order book, than where it was at the same time last year. Our confidence comes from the fact that while we signed 14 large deals in the last fiscal, we are already operating at a run rate of signing 20 large deals at this point in time. And finally, our confidence comes from something that we've always said, from an execution intensity that is uniquely our own. We have always, for 8 years, not for 2-3 quarters or 2-3 years, talked about being hyper-specialized on a very select set of industries. We have always focused on deep engineering capabilities. Tie that to the execution intensity, reflect back on the track record, look at the number of large deals signed, total signed order book. That's why the commentary you hear from us is atypical, and it's a commentary that we will, as always, deliver upon.
Got it. Mr. Singh, I hear you, and I think in the call as well you said that you are aiming to close multiple large deals in FY26. Now, what's the nature of these deals? I mean, cost takeout deals, transformational deals, are these deals happening at the margins that you would like? Because I also hear you speak numbers from 14 to 20 large deals on a monthly basis. So that's a lot of optimism here.
Well, I mean, we're not going to do something in the future which we haven't done in quarter one, Neeraj. We signed 5 large deals. If that's the velocity that we sustain, that'll be 20, correct? So we're not out here trying to talk about amping up the growth curve. We're just talking about sustaining the growth curve, though of course the intention will be to take it beyond the 20 number that we're aiming for. The 5 large deals that we announced, 3 of them came from North America during the quarter, 1 of them came from the Middle East, and the 5th one came from India. It was a clutch of large deals. 1 of them was focused on setting up a GCC. There were 2 that were focused on legacy modernization, and then there was 1 that was focused on intelligent operations. So it's a wide swath. It is spread across the world, and it cuts across the business units that we operate across.
Let's just talk a bit about Sabre, Sudhir, if we can, and the kind of improvement or increase that you're expecting there.
Sabre was always planned to be a 2-quarter sequential increase. Quarter 1 is over, and the growth numbers reflect in the performance of our travel vertical. Our travel vertical, you might have noted, is growing 94% on a YOY basis. We expect further sequential addition to the team size in quarter 2, and that again should translate into very robust organic growth numbers in quarter 2 as well for the firm.
Okay, what are the sort of broad blue sky exciting trends that you're seeing, and are you getting concerned at all by the uncertainty which is coming in from the United States right now? I think the entire IT pack, on a aside, the entire IT pack down today because of lack of clarity of a trade deal between India, US, etc. All of those things happening. Are you seeing that concern in your conversations at all with clients, Sudhir?
See, the ground reality, what we see in the trenches is the following. The enterprise budgets are getting compressed. They are getting compressed, 1, on account of the uncertainty that you talked about. They're getting it compressed, 2, because of the expected efficiencies from AI that every client conversation veers towards. That's a bucket that is getting compressed. It's likely to keep on getting compressed. There is another bucket. That bucket is growing faster than the other bucket is getting compressed. This is the change the enterprise budget. Our growth is coming off the back of not adding people and going up and down depending on the economic macros. It is coming on the back of proactive managed services based large deals that we are signing. Our ability as an organization to you cannot apply AI in isolation. You have to set up the data foundations. You have to set up the infrastructure. You have to be able to look at L1 to L5 processes and then contextualize the application. Our ability to do this clutch together in an integrated manner and not just talk about it but to execute on it is what is setting us apart. So that's where the confidence comes from. That's where the assertion that I made to you comes from.
Okay. Well, Mr. Singh, we wish you all the best in this present continuous journey, if you will, and looking forward to talk to you more often. But thank you so much for speaking to us today.
Thank you, Neeraj. Pleasure speaking with you.
Likewise. And which is why maybe Coforge, Persistent, and a few others get the valuations that they get, because